So ironically, I was in the process of putting together my own public company to go out and acquire RV parks. And I was introduced to our other general partner, John Cascarano. And John's based down in Nashville, and he had a really nice resume. He went to Duke University, which is not so nice if you went to North Carolina, but good university. And then he went to Michigan and got his real estate law degree. And, he was doing real estate legal transactions. And somebody approached one of his clients about taking over a contract that they weren't going to close on to acquire an RV park. And he asked John, look, you did all the work. You put together all the contracts, the terms and conditions. And for whatever reason, it didn't, wasn't an acquisition he wanted to go through. And so John said, well, I'll buy it. And so John was a little bit of an entrepreneur. And so he bought his first RV park. And then it was like, wow. At the end of the year, him and his wife got a K1 that said that he actually lost $400,000 from an asset that he bought that he made several hundreds of thousands of dollars of net distributable cash flow. And so he was like, wow, you mean, I tell him all the time, I said, John, they don't teach you about depreciation in law school. They teach the real estate guys about the depreciation. Mm-hmm. So he got the bug and he started buying up RV parks down in the Southeast. And then he came across somebody else who had access to a lot of retail high net worth investment capital. And so he started putting together some of his first co-investment funds. And so when I met him, in just 2 years, they had already bought something like 25 RV parks, and they had co-invested with more than $50 million worth of high net worth accredited investor capital. And they had something like 500 investors already. And so I was blown away, to be able to buy, 20 RV parks in less than 2 years, and then pull together not only the equity to do it, but also get the financing from banks to close on all those transactions. I was very impressed. So I said, look, John, I've been doing this for 30 plus years. You're fairly new to the game. How's your operating platform look like to manage these assets? And he's like, well, I've got about 80 to 100 people that work for me now that all they do is manage the assets. And that's kind of when I was sold. I was like, wow, impressive. And I said, look, John, rather than me doing my own public company and us competing, I think it's a good complement here because, there's a lot of bear traps out there that you just haven't stepped in yet that I know of. And in order for this really to be successful at scale, you need to get access to the relationships that I've already nurtured and built over 30 years. But more importantly, I know exactly the playbook of how to acquire, aggregate, and exit to the institutional world. And that institutional world fills my Rolodex. Mm-hmm. So John and I partnered, and he was blue metric. Again, he went to Duke and he went to Michigan, so he likes the color blue. I've been the capital company since 2002. So I said, why don't we just be simple here and call it the Blue Capital RV Investment Fund. So now we're up to like 40 parks in 16 states, and we've got like 700 investors.